Hello, ladies and gentlemen. Welcome to another insightful video from White Paper Actuaries. Today, we'll explore Sukuk bonds, popular in Middle Eastern countries, and their role in actuarial valuations of end-of-service benefits in Saudi Arabia. This is an introductory video, with more detailed discussions to follow. A typical bond is a debt arrangement where the seller receives an initial sum from the buyer, repaying it with interest over time. However, Islamic finance prohibits riba, interest, leading to the creation of Sukuk, which aligns with Sharia principles. Sukuk represents partial ownership in a tangible asset, investment, or project, providing returns through profit-sharing mechanisms. The term Sukuk is derived from the Arabic word sak, meaning a financial contract compliant with Sharia law. Since its inception in the beginning of the 21st century, Sukuk has evolved to meet the growing demands of Islamic finance. Saudi Arabia has become a key player in the global Sukuk market. Currently, Sukuk accounts for over 60% of the outstanding debt capital market in Saudi Arabia, with most new issuances in Sukuk format. As part of Vision 2030, aimed at diversifying the economy away from oil, Sukuk plays a crucial role in financing related infrastructure projects. There are several variations of Sukuk, including Ijra Sukuk. The issuer leases an asset to an investor who receives regular rental payments. At the end of the term, the issuer buys back the asset at a predetermined price. Mudraba Sukuk. The issuer invests the investor's capital into a business or project, sharing profits and losses on a predetermined basis. Murbaha Sukuk. A cost-plus profit sale agreement where the issuer buys an asset using the investor's capital and sells it at a higher price, with predetermined costs making the income fixed. Mushrakah Sukuk. A joint venture with multiple partners contributing capital and sharing profits. Istisna Sukuk, used for construction or manufacturing financing, where the issuer agrees to produce and deliver a specific asset at a future date. Several factors influence the yield on Sukuk bonds. First factor is underlying assets, the type of Sukuk structure, Ijra, Mudraba, creditworthiness of the issuer, and issue size. Coupon rate. Fixed rates provide predictable income, while floating rates protect against inflation, both affecting the yield. Long-term Sukuk generally offer higher yields due to increased risk over time. General market conditions and the overall economy also impact Sukuk bond yields. Many Sukuk bonds are traded on the Saudi Stock Exchange, Tadawul, providing real-time yields. Sukuk bonds with coupons have quoted yields as yield to maturity, YTM, which need to be converted into spot rates for actuarial valuation purposes. We now look at key concepts of actuarial valuation. Actuarial valuation of end-of-service benefits involves considering various future scenarios an employee exit or stay with an organization. This requires multi-year projections. At each step we evaluate benefit an employer need to pay based on employee decision. Let us take an example. Assume an employee, currently aged 55, is working with your company. As an active employee, we need to estimate his or her actuarial liability for the end-of-service benefit. The first step is to estimate the probabilities of the employee exiting or staying with the organization until retirement. Now at age 56, we need to consider the probability of the employee exiting the company and receiving the end-of-service benefit, or probability of deciding to stay and work until age 57. Similarly, the employee has the choice to leave the company or continue working. If the employee exits, a payment will be made by the company. This logic is then extrapolated for all future years until retirement. During these periods before retirement, an employee can exit due to attrition, voluntary or involuntary, with probabilities determined using future withdrawal assumptions taken in the valuation. At retirement age, the employee is assumed to retire, and any further stay with the organization is considered. The benefit is paid by the company, and the calculation is closed for that case. This exercise is repeated for each individual employee to determine the various financial figures required by the company as per accounting standard reporting. Having examined various future points of benefit payments, let's now consider the amount of benefit to be included in the valuation. The primary purpose of end-of-service benefit valuation for Saudi entities is to report financials for account preparation. Major accounting standards, such as IFRS and US GAAP, recommend the use of the projected unit credit (PUC) method. This method gradually recognizes costs over an employee's working life, rather than recognizing the entire cost at once. Under this method, an employee's past service accrued benefit is evaluated with allowances for future inflationary increases, such as salary increments. For example, the benefit payable at age 56 will consider the current service at age 55 along with the employee's salary at age 56. Let us understand this further with an illustration. Assume our employee from the previous example has accrued 100,000 Saudi Riyal as of the valuation date, based on their service and salary at that time. At age 56, with an expected 5% salary increase, the benefit payable would be 105,000 Saudi Riyal, an additional 5,000 Saudi Riyal. This expected benefit is likely to be paid at age 56, which is 1 year from the valuation date. Therefore, we need to determine the present value of this benefit by discounting it for 1 year's time value of money. In our example, assume it reduces the value by 3,000 Saudi Riyal. Thus, the net liability or defined benefit obligation for the employee's end-of-service benefit, using actuarial valuation, will be 102,000 Saudi Riyal. This process is repeated for each employee, and the aggregated total of all employees' liabilities forms the overall scheme liability. Sukuk bonds play a crucial role in the actuarial valuation of Saudi end-of-service actuarial valuation. The discount rate used in the valuation is determined using the yields of Sukuk bonds. Higher yields on Sukuk bonds result in a lower present value of liabilities, and vice versa. Actuaries use the spot yield of Sukuk bonds with appropriate durations to select the discount rate for valuation. We would be pleased to assist with any actuarial valuation needs you may have. Our solutions help organization with several value adds along with standard accounting report. Some of these solutions are detailed gain-loss analysis, where we analyze and share key drivers of liability movement in current valuation period. Understanding these factors helps organization draw future strategy for assumptions, risk management of scheme. Consolidation. Organization with multiple entities within or outside Saudi Arabia can benefit from our consolidation report. This is an Excel-based report with currency conversion feature so that results can be viewed in single currency even though base results are in different currencies. Complementary transition. Companies often worry about the impact of changing actuaries on their scheme financials. To address this concern, we offer a complementary transition service as part of our valuation takeover process. We conduct a thorough replication of the previous year's work for our clients. This pro bono service ensures a seamless transition and helps the company understand any potential impacts resulting from changes in actuarial calculations. We hope this video helped understanding the intricacies of actuarial valuations and the role of Sukuk bonds in managing end-of-service benefits is crucial for companies operating in Saudi Arabia. We invite you to schedule a meeting to explore our advanced tools and solutions, which are designed to enhance the management of risks and financials associated with your defined benefit schemes.